Hey traders, Raghee here, and in this free recap video I'm going to talk about one level that's going to help you a lot with understanding just the sentiment on the morning and when maybe the sentiment may not be all that clear. And we're going to stick with the intraday theme that we've had so far this week with our premium and the recap videos, and that is, where are we in terms of the volume weighted average price, whether that be a 1 minute chart, whether that be a daily chart, whether that be a weekly chart. Where are we in terms of the relation to what's known as the VWAP? And the VWAP is, looking at price really through the prism of volume. That price that has more volume participation is going to be inherently more important than price with less volume participation. Attention, participation, that's going to intensify the importance of any support or resistance level. And there aren't many tools that do this. I mean, one of the things that we look at in the room would be things like the value area high, value area low, and a point of control. Same philosophy. The VWAP to me and market profile and volume profile is related in that they both emphasize where price and volume are overlapping to point out a more important level. And in this case, the volume weighted average price told us right from the open we want to focus on the short side of the market. We were below that level, printing plenty of red grab candles. So there's so much redundancy, which is terrific. I mean, visually, without a doubt, you've got many tools that are telling you the same story about price. And I think those kinds of differences are really powerful. So what was today's trade? It was a short all the way. There was never a reason, and there was never really an opportunity to want to think to the long side, which there's a lot of value and being one-sided with your trading. I'm not a big fan of looking at any chart at any moment and finding solace in, hey, I could be long or short. If I have that running through my mind, it is not a trade. It is not an opportunity, and there is no setup. But when I'm very clearly bearish, when I'm very clearly expecting the market to continue to be rejected, I can be a one-sided trader. I can focus on those short setups and not be persuaded, distracted, or even shaken out of winning trades by thinking, well, this could be a buy and this could be a short and this could be no, right? You're going to find yourself making your broker really rich with all the commissions, and you're going to find yourself really with a very hyperactive sense of trading. And for some traders, they're great at it. They're fantastic at it. I got a buddy of mine who's an honest to goodness market wizard, and he's out of the market constantly, sometimes 100+ times per day. That's what he does. It's not the way I'm wired. And I've actually found it's not the way most people are wired. I think for a lot of traders, if I could tell them, hey, you have a job? Great. Trade with me the first 60 to 90 minutes of the morning and call it a day. I'm not talking about just saying to yourself, well, all I need is 60 to 90 minutes. No, but is there a way for those of you that say are doing something else, whether that be a job, taking care of a parent, you've got kids. The reality is you don't have to be in front of the computer all day, every day. There are certain windows of time that are just going to be better to make decisions about certain kinds of trades. And for day trading, for me, that is 9:30 to approximately 11 o'clock. And in those 90 minutes, a lot of great things can happen. One of the things that I noticed when I was out in California teaching traders how to day trade in the mid-90s was the fact that they could get up in the morning early, put their day trades in, and then go to work. And day trading was huge on the West Coast. And of course, I was so jealous, and now I get why it's so popular. You guys don't have to trade this trading with your real your work, right? With your full time, with your quote unquote real job. Right? On the East Coast, that wasn't really a choice. So, can we take the day and make it so that you can spend 60 to 90 minutes per day and that be it? I'm sharing with you now the first 90 minutes of my day. And for a lot of the traders in the room, by the time 11 o'clock rolls around, they're done for the day. They're done for the day. And I love being able to give my traders that kind of freedom. I love to be able to give myself that kind of freedom. So let me give you one other example. And this was the NQ. And again, we're looking at the volume weighted average price pretty much pointing the direction all morning long below it. And then we had these what we call the 15-minute breach, actually both on the Russell and the NASDAQ, which if you've been following these recap videos for any length of time, we've talked at length about them. Okay, so think about where you are in relation to those key levels of price and volume. Think about where you are in relation to the volume weighted average price. You know, we've been doing this so much, so often for the better part of the last year that a lot of traders have said, Raghee, why don't I hear more about volume weighted average price? What is it? I've tried it. And so I've realized a couple things about VWAP. One, it's actually within the lifespan of indicators, pretty darn new. It's not as old as some other kinds of indicators. In fact, you could probably find your first white papers on VWAP between the mid to late 80s. And then in the early 90s, as we started to get computer processing that could crunch all the data between price and volume, when we had more transparency, we had access to the information from the exchange at a more reasonable price. All these things really started to gain steam really the early 90s and on. So volume weighted average price is pretty new, but it's been something that has been used since the mid 80s. And institutions and funds have been, your Fidelities, etc., have been using this kind of information for a long time. It just wasn't accessible to us till, relatively speaking, pretty recently. So there's a lot of traders in the retail space that are saying, well, can I use this? Can I understand what they're doing, and how do I do this? And there's a lot of misunderstanding about how to use volume weighted average price. There are a few techniques, there are a few things to watch out for, and I'm going to be talking about that tomorrow at 7 p.m. So whether this is day trading, like I just showed you the example, or whether you're looking at longer term trades in, say, crude oil, something else that we did with volume weighted average price. And here's a chart of that, where we use volume weighted average price to get a piece of crude, which this has been a great trade. And whether it's, building a longer term portfolio where I'm looking at opportunities to look at a holding that might be 3-6 months plus, does it make sense to be trading on the side of institutions? Does it make sense to look at price and volume, which will really precede any kind of indicator that can come after it? So I'll be sharing all that tomorrow and more. Tomorrow at 7 o'clock Eastern, 7 Central, 8 Eastern, and I'll see you there. I'll see you in the next update.